Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is the Chief Executive Officer of Treasury Consulting LLP. And today we are going to cover a dedicated video about carry trade, Australian dollar carry trade, but covering the 30-year yield which Australia recently opened. So what did happen? First of all, we would like to explain what do you mean by carry trade. Now, carry trade is a phenomena whereby an investor in a country who is getting less money, because we all know that sitting today more than 13.5 trillion dollars of sovereign bonds are having negative interest rate policy, which is shortly known as NIRP, and the value is 13.5 trillion, right? Now negative, now due to that, suppose I am an American. Now, if I am an American and I am earning 0.65%, right? Or so if I am an American, I am a US national, I am earning 0.50% in US. On the other hand, I have a country which is known as Indonesia, which is offering me 7.7%. Then I love to go to Indonesia, because here I am earning 7.5. Here I am earning zero point 0.5 in dollar terms. Here I am earning in Indonesian rupiah. I know that if I compare this with the dollar, which is using an exchange rate dollar to IDR, Indonesian rupiah, then I would get a much better return which I am getting in Indonesia. This is all about a carry trade. One thing which we need to understand in carry trade, that carry trade, the negative interest rate policy recently we have across the globe, especially by Europe and Swiss. This is hurting the economy in the sense, like, if you carefully see that, sitting today, the top 10 central banks assets risen by 21 trillion in last 5 years, and predominantly in this, who predominantly contributed is ECB, European Central Bank, and of course not to mention the by Indonesia, by Tokyo and Brazil. So there are few countries who are increasing their balance sheets. Are like everything, like anything, we all know that increasing the balance sheet would have a repercussion effect on the economy. This will increase the financial inflation, but nonetheless they are doing that, right? So what did happen? Carry is turning out to be very important, because where the QE would happen, the yield would surely be fall. So take a simple example. If QE would grow, right, your yield would surely be fall. Like in Tokyo, yield is negative, your Swiss yield is negative, your Europe yield is negative. So everywhere yield is negative. Now what did happen on 16th October 2016? On 16th October 2016, Reserve Bank of Australia issued bonds, in which what they did, it is a 30-year bond, and they offered the yield of 3.27%, which is much higher sitting today. I'm not saying this is a very good yield, but I'm saying that considering the current situation, this is a much higher yield, because UST, United States Treasury 30-year is trading at 2.51%. So which is roughly, there is a difference of more than 70 bips, between 70 to 80 bips in that yield. So in that sense, the yield which Reserve Bank of Australia offered was much higher. So what an issue that has happened in the yield, that 2/3 was subscribed by international investors, and rest by domestic investors. Now this is the cause of concern, because if more foreign investor will come and take your holdings, there would be two issue. Number one issue would be Australian dollar would be carry oriented currency, which Australian dollar is already, but that is investment carry. Secondly, you are prone to volatility in FX market. You are already prone to volatility in the FX market because you are a commodity currency. But on the other hand, if you continue to be oversubscribed by foreign players, then you are much more prone to the foreign holders, right? In that sense, if they come out of your country, if they stop investing in the carry trade, then it would be difficult for Australia to move higher. But this has led to some different this has led to a little bit different movement. But before moving further, let me explain you again. Carry trade is a phenomena through which I would say, carry trade is a phenomena through which what you do, you try and increase your interest income, because if you are an American, then you are earning 0.5%. On the other hand, if you are an Indonesian, then you should earn 7.7%. Then what you do, you will sell your dollars in US and you will invest in Indonesian rupee and you will try and make money. And sitting today, this is having a repercussion. The reason why it is happening, that as per the latest news, the top 10 central banks assets have grown by almost 21 trillion dollars in the last 5 years, wherein the YTD year till date is approximately 10.7%, and prominent are Tokyo, Swiss, and Europe. Now, in all these amongst with all these backdrop, Reserve Bank of Australia issued 30 years bond at 3.27%, and sitting today, 30-year United States Treasuries are trading at approximately 2.51%. Let's take it 2.5%. So which is 70 to 80 bips higher. So RBI is 70 to 80 bips higher. So what did happen? More than in the last few issuance, we have seen that 2/3 of the subscription is getting done by the international players, because they are seriously interested towards carry, and rest is done by the domestic players, because of course every international investor would like to invest in a currency where I am making 2.7% rather than investing in a currency where I am making just 2.5%. Now what had happened, there is a company in Tokyo whose name is Tokyo AMC. AMC stands for as Asset Management Company, whose name is One Corporation. They have 50 trillion yen or $480 billion as asset under management. Now they have 50 trillion yen or $480 billion of asset under management. Now what they did, they also participated in that, and they bought a considerable holding in that bonds. Now this bond was having coupon of 3.27%, tenor is 30 years. Now what this Japanese firm is saying, that in next few months the yield would fall to less than 2.5%, as more negative interest rate parity would come. I would say central banks will move toward negative interest rate parity. Fundamentals will go haywire and so on and so forth. That if this would happen, there would be 24% gain in his portfolio only because of that Aussie bond. So if the yield would reduce by 25%, there would be 24% gain that would happen in his portfolio. And the reason is very simple. That when the yield fall, principal up, and this is known as capital appreciation. When the yield up, principal fall. This is known as capital depreciation. Now, amidst all these capital appreciation and depreciation, this gentleman is expecting that yield to fall. And if this would happen, there would be 24% gain in his portfolio. Now, there are two things which we need to understand from that statement. The number one thing is, that the carry would go down. Number two things, the interest rate would come down. Number three, the investment carry. Investment carry currencies like Australian dollar, Canadian dollar, United States, Indonesian rupee, and predominantly Singapore dollar and Indian rupee, they would continue to follow the accommodative monetary policy. And if this would happen, then of course the carry would get down, and of course all the bond holders who are holding the bond at the higher level, they would continue to book M2M. They continue to book M2M. M2M is they continue to book mark to market in their position. I think this is one of the reasons why the US banks today, if you seriously see, that they are reporting a very good profit. I strongly doubt about the fundamentals of the same, because of course I would certainly agree with the fact that almost every central bank is doing quantitative easing, and because every central bank is doing quantitative easing, because of the same, the yields are fallen, and these banks are holding huge amount of derivative instruments and huge amount of money market instruments. Because of that, they are gaining the money. This is what for the day, as to let you know that how Aussie is turning out to be issue in the carry. You're welcome to connect with us at rahul.magan@treasuryconsulting.in. Our alternate email is info@treasuryconsulting.in, and my website is www.treasuryconsulting.in. Our mobile number is 9899242978. So we thank you very much, and hope to see you soon.